Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for January 8th, 2026, Thursday. Today, the markets were broadly higher, although the NASDAQ lagged on average volume, and Trump QE to the rescue as he's going to buy back mortgage bonds, hoping to lower the long end of the curve and stimulate housing. Again, my name is Jeffrey Scott. I am marketmripro@gmail.com. My Google group is called Top Down Trader, and my website's Market MRI Pro. As always, this and every one of my videos is for educational purposes only. I do these videos to demonstrate how I use my tools for top-down analysis. Trading involves risk. You alone are solely responsible for any decisions you make. I may own or intend to buy or sell any stock I mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisors, and I've got tools on multiple platforms. My Google Groups, just called Top Down Trader. Go to Google Groups, sign in, look for all groups, find mine. Let us know how you want to be contacted. You'll get invites to my different educational programs. You'll get notification when I post a video, and you'll get things I don't post anywhere else. Know your news and earnings. Tomorrow we got the monthly employment numbers. I think we had some mixed response to the data today. I saw a big increase in the Q4 GDP projections. So certainly the government's expecting a strong economic GDP for Q4. Starting to see some earnings trickle in. They really come in next week. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Well, yesterday I talked about the JP Morgan effect. Of course, today Leibu sold off as biotech saw profit taking. And then late in the day, right before the close, we're no longer talking AbbVie in Revolution Medicine. Now there's rumors of Merck. And of course, LABU is up after hours. It'll be interesting to see what happens here. I think it's telling a story. It's not just a story of all this happening going into JP Morgan, but AbbVie lost Humira exclusivity. Big drug, and they're watching their revenue drop. Merck will lose Keytruda, which is the largest selling drug in the world. It's a cancer drug. And the good news, when it loses exclusivity, it'll become cheaper because there'll be biosimilars, copies of it that we can buy at less money. But Merck is going to have to find ways of making up revenue. Bristol Myers is in the same place when it comes to nivolumab, which is their Keytruda-like drug. So we're going to see a lot of acquisitions having to occur because a lot of big pharma struggle to come out of their own drugs, but they buy things that are close to being approved. So interesting time. Any questions about the program pricing? As I mentioned yesterday, I'm running the Black Friday to the end of Friday because Praveen asked me to reach out at marketmripro@gmail.com. If you have the program, have any issues, coding at marketmripro.com. And let me just give a warning to all my owners. You know I love you, and I do this to help you learn how to use the program. But if you don't upgrade to the App Store, Windows App Store version, come Sunday, there's a good chance your product's not going to work. So if you still have version 3.03, it's going to stop being supported on Monday next week. It's an easy upgrade. You're missing out on a ton of features anyways. It's stable. It's what I use every day. But reach out to me and I'll send you the information about what you need to do. It'll take 10 minutes for you to switch over and you'll be happy about it. If you don't switch over and you decide 6 months from now that you want to use the program again, you'll break my heart because you're not using my program, but we can switch at any time. I just would rather you not have service interruptions. All right, markets were super strong today. You could see Russell up 1.35, Diamonds 0.73, dollar up 0.29, Spider 0.15. The only thing that lost up here is the Qs, and it lost just a bit, and volatility was actually I'm looking at the wrong thing, aren't I? Ah, should be looking over here. Um, let's do that again. Russell up 1.09. I think I said that. 0.52 diamonds. Spiders lost 0.01. Qs were down 0.5. That's more like it. VIX was down 0.7. And Bitcoin was down just a bit. So mixed markets, and we've seen this a lot lately. Diamonds and Russell outperforming. In fact, if you go back and you look at 5 days, you can see diamonds up 2.5, Russell up 4.9, almost 5%, and the Qs are only up 1%, and the spiders a little bit over 1%. So there's definitely been rotation in the indexes. Strong day in the market, so the number of new highs minus new lows at 52 weeks went up on the NYSE and the NASDAQ. We can see participation was great, 74% in the S&P 1500, 56 on the NASDAQ, 73 on the NYSE. No surprise that NASDAQ is less. That's the one that was down. If we look at one-day performance, energy up 3.15, staples up 2.38, materials 1.76, discretionary 1.67. Were the leaders. To the downside, it was tech and healthcare. If you don't think that Trump QE isn't going to get people excited in housing, well, look at what happened. ITB was up 4.22%. Cannabis, I don't really care about, 4.15. Expiration, 3.63. Someone's going to have to do a lot of expiration on that Venezuelan oil. Retail's 1.8. A lot of services will be needed as well. MLP infrastructure, discretionary, transports, all higher today. Where was the weakness? Biotech. Now, biotech's had a big run, and so not a big surprise. Tech software 1.69, semis 1.57, cyber 1.43. If we look at the timing model, obviously the diamonds and the Russell are going to be good, but we have not flipped. We're just looking at the daily timing model, which is the line underneath the charts. Green, 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 and green. Spiders, Qs, diamonds, Russell, all still in a daily buy, all still in a weekly buy. So that scenario tells me we're long the market. I don't go short in a setting of my timing models being long. And if you worry about really long-term models, the monthly is still long as well. If we look at the major index ETFs, the spiders kind of in the apex of their wedge here, or ascending triangle, whatever we want to call it, right on the prior highs. It's in an interesting position. Strong market tomorrow, we might break out on the spiders. You think of all the support we've got underneath. We still got this trend line. We got the 17 and the 21-day EMA, which are superimposed. We got the 50, the 100, lots of support under here. I'm still bullish, the spiders. Hughes had a rough day today, but really nothing's changed. They're at the apex of their wedge. I still think they'll go higher and retest here, which is the prior highs. Again, like the others, they got the 21 and 17 underneath. They got this trend line. 100-day moving average, and you got the 50 up here too, 27, 50, 21 EMA, 17-day simple, and 50-day simple are all squeezing together here. And here's the 100. If we look at the diamonds, which were strong today, you could see not quite back up to all-time highs, but getting close. Looks great. And if we look at the Russell, I'm kind of wondering, let's see, the high on this day is 258.93. Closing high, close here was, the high was 258.01, all-time high set today. On the Russell, what's the close here? Close is 257.80, and the close here is 258.27, and the high here was 258.20. So, what do I see? All-time highs, all-time closing highs, all-time highs set today on the Russell. Woohoo! Now, of course, there's not a lot of market cap there, probably less than Google or Netflix, but it feels good when we get all-time highs. So that's really exciting as well. This market's a strong market. Volatility, this has been bothersome. It continues to trend higher, up today on the VIX futures 0.46. I don't like the pattern. That's telling me something's potentially coming, but not necessarily tomorrow. And the dollar is also rising right into this area of resistance. But remember, the dollar is way off its highs and kind of sideways seasonality. Looking at commodities, eventually everything's going to take a breath. And let's see what commodities did today. So gold is sort of consolidating in a wide range, has strong seasonality, had a bullish engulfing pattern around a doji yesterday, was up 0.5%. Silver, on the other hand, was down significantly, 1.76. Really has held up well after what we thought was a potential climax run. Here, got to higher highs and still selling off. Maybe this is just setting up an area of consolidation before the next move. Oil rebounded today. Not exactly sure. I wasn't watching freight oil, but seasonality, this is the, you can see in the 5-year seasonality is strong, but 10 and forever seasonality kind of sideways. A break above this line would be great. Right now it's pulling into where it's failed before. Natural gas, which has been rallying, reversed today, was down 4.33%. 30-year and 10-year will be interesting to see what they did in response to Trump QE. 10-year closed off the highs but was up 1.04%, while the 30-year was up less than 1%. They should benefit from the Trump QE if it's real. Question is $200 billion enough to make a difference? I don't know. We'll see. Trump's going to take a victory lap, that's for sure. Buckets are amazing. We are whipsawing above, below, above, below. Yesterday we were more below here than we were today, but we were more below yesterday than we were above. And then today we rebounded. So there's no signal here, 14% above on the NYSE, 9 on the NASDAQ, 13 on the Russell, 12 on the S&P. But the markets are, it's volatility good and volatility bad. This was a pretty significant move of strengthening of the market in one day. And the market breadth tool, nice rebound on the NYSE, still off all-time highs. A little bit of a bottoming candle on the NASDAQ composite. So both bullish looking patterns, even if the NASDAQ was down. Stocks above the moving averages are not at a signal level, but are definitely increasing. And on the breadth, the new high minus new lows, the AD lines and the up-down volume are all favorable. No new signals today. When I looked at the market breadth, especially the 13-week, it turned up some today, but still nothing in the 90s, 0.74, 0.84, 0.83, and 0.72. So no sign of an impending reversal using that breadth tool. So if I put that together, markets still stay to be long, but it's volatile and it may get worse before it gets better. If we look at my non-ratio sector timing model, Bitcoin opened lower but closed up on the session. Still down, but not down very much. Still at a buy. Technology has turned negative. Discretionary is strong right now. Communications is strong neutral. Industrials holding up okay, as is financials. Energy made a big rebound today. Materials are holding up. And then down here, real estate still in a sell, had a positive session, as did utilities. Staples threatening to break out, and healthcare giving up some of its gains. I'm going to look at the ratio charts just because I want to see what biotech, excuse me, I have to look at a different product to see biotech, but you could see the big move here in energy, a lot of strength today. If I look at the stock market timing, just to give a look at the stocks that everybody owns, Amazon continues strong. Will it make a run here up to 260 and retest? That would be great. It's one of my bigger positions. Um, Apple, well, at least it had a reversal candle today and closed at the high of the session. Is that enough to reverse it? It may be, but I'd still wouldn't be buying it until I see some more sign that this is real, well below the moving averages. Google, as I mentioned, I bought some yesterday. Today it opened higher, was up on the day, but came in off the highs. Meta, no, breaking down again. Netflix, no, still in the issue of who's buying Warner Brothers. Tesla, like Apple, a positive looking close, up on the day. I like to see it retake the moving averages. NVIDIA, this one has been holding stable, but gave up some today. Still in a buy, but barely holding on. And Microsoft, after a couple of days of a run, failed at the resistance, and we'll see where it goes. So Google probably looks the best of these. Um, and that, as I said, that's when I'm long. Labu and Amazon. Uh, Laboob traded back down today, still in a buy. It'll be up at least at the open tomorrow, unless something blows up along the way. And I say that because of the enthusiasm we might see regarding the Merck and Revolution Medicine. Now, of course, if they come out before the open and say, "Nah, we're just kidding," well, that's not going to be great for the markets if that's what happens. All right, what else do we got? Pharma gave up a little bit today, kind of flat. Data centers, is this a reversal candle? Is it coming down? That's important for me to know because I've got a bunch of stocks that are related. And here we have transport, defense, and aerospace. And this is being driven all over the place now by the government or by Trump, going after leaders and their salaries, going after spending more money. I don't like manipulated markets, and this kind of feels like it's being manipulated by the president and the White House. So might be done for a while. All right, now let's go to the JAS layout. Go into the top down. We got almost 3,700 stocks passing our filter today. Looking at the broad markets, what was working? Staples, energy, defense, discretionary, and basic materials are the top four. Let's just see what their top 10 industry groups are. 2, 3, 4, 5. Gives us 124 companies. Let's filter them 5 and 500. Now tonight I'm just going to show you another way I look at this. Here I picked the best industry groups. So if you've noticed the last couple of days, the number of A-plus stocks has been ridiculous. One of them is in the top 10 industry groups in the top 4 sectors, and that would be Sunoco. So here's Sunoco coming out of a squeeze with 2 momentum dots, breaking out here, not extended. Good seasonality right now. Relative strength and OBV look good. That might be an interesting one to look at. And the other one I might check is just the A. And what do we got? LOW, Lowe's. So this would benefit if people are putting more money into their house. So if rates come down, more people can take secondaries and go to Home Depot and Lowe's and spend money. So one to watch. This is requiring relative strength OBV to be favorable, a squeeze with momentum or breakout or both. This also has volume. SKY, what is SKY? Another housing stock, Champions Housing, expensive one, $90, super strong day. Earnings are not to February 3rd. SN, Shark Ninja. They make a bunch of cheap household appliances. Run up, pull back, and a breakout. This would have been a good bar to be looking at. It is not extended. Oh, let's change my mind. It is extended, so I might be careful here. And then Sun again. So that's a way to do top down, focusing on the best stocks in the leading industries and sectors. I'm going to call it a night at 20 minutes. There you go, a full top down, a couple of ideas to look at, and we'll see you tomorrow. Actually, we won't see you maybe until Saturday. Take care, everybody. Any questions about the product? Happy to have that conversation.